Hello everyone, welcome to elliottwave-forecast.com YouTube channel. This is Henry and today is Tuesday, September 14. The time is 1 a.m. GMT. And for today, we are looking at the chart of the Euro Yen. This is a 45 minutes chart right here. We can see we ended this with B at 130.748. And so what that means then is that we are right now within the C leg on the downside, and within the C leg we can see currently it is in progress. First leg here ended with 1 in the minute degree, and this is here with 2 already completed, and then already continue lower and break below 1 again. So we are within the wave 3 of 1, right? Within wave 3 of 1 here. So still, I mean, quite a long way to go then, if that's the case. And shorter cycle, as long as we stay below 130.75, we are looking for the downside. All right, so let's zoom out to get an idea where we are. This is a 4-hour chart. Now let me move some of the labels here from the 45 minutes. So this B is right here, and this 1 and 2 in black is right here. Okay, so now let's try to make sense of this. Let me zoom out a little bit more. Alright, so if this is a B, right, if this is a B, then it would mean that this has to be your A, right? This has to be your A. So what that means then is, okay, if this is an A, then maybe this cycle from June the 1st, this is called it's almost like reverse engineering the label, right? June 1st high, if you label this as an A, then this is a 5 wave, some sort of a 5 wave down, right? I mean just by looking at it, you can just simply, okay, let's see, 1 2 3 4 5, and this is completed the P. But of course, until you really break below the A, then technically speaking, you can do what we call a double correction like this and turns lower and so on, right? But for now, calling the more aggressive view, then we are considering this correction completed the B, right? So if the B is complete, then we're looking for the C leg, and the C leg is going to be equal to the A. I mean, technically A, B, C, right? C equal to A. So that's a lot. If this is correct, then there's a lot of downside left. But okay, before we get too greedy, right? Before we get too greedy, let's look at it from the perspective of what will be the logical minimum expectation, right? Now let's take a look at this short-term move here from the B to the downside. Now if you look at it, it looks like a 1 2 3 4 5. I mean, if you don't consider this as a 3 and 4, then you can still count it as a 1 2 3 4 5. Like, I'm just counting the number of swing here, okay? Not even thinking about Elliott Wave, just counting the number of swing. It looks like a 5, right? It looks like a 5 swing, which is technically an incomplete sequence. Even if you are bullish the Euro Yen, because you got a 5 swing here, a shorter cycle seems to me, it suggests another leg lower is likely. Alright, let's take a look at the RSI. Now you can see a divergence right here. You can see a divergence right here. So another possibility I can think about then is the idea that instead of wave 2 of 3 here, I can simply move 1 here, I can simply move 3 here, I can simply move 4 here, right? And then now we are doing this wave 2 correction. So does it mean, you know, it is bullish and this is wrong? Not really. All it does is just slightly bigger degree rally, if that's the case. Slightly bigger degree rally, but still, as long as it stays below 130.7, which is the beginning of that 5 swing, then the pair likely still can extend to the downside. So the way I want to look at it from the minimum sort of expectation point of view is, because I see a 5 swing here with a divergence at the low, it looks to me we do have a chance to extend to the downside more, probability wise, right? Leaning towards that direction. Now, of course, nothing is 100% in trading, right? I see a lot of comments, oh, you can do this, you can do that. So what do you expect? Is it 100% doing something, right? I mean, everybody that trades long enough understand trading is all about probability and risk to reward, right? Risk management and so on. So people that always just want to say something negative about, oh, you don't have, you explain, alternates and all those things. They never really trade for a long time, I guess, because if you trade long enough, if you can survive more than 5 years, you understand trading is all about risk management and probability and so on, right? Anyway, so we get a 5 swing, suggesting probability wise likely we can see for the downside. Now, of course, yeah, we could be ending one here and then doing the 2 in black, which is slightly larger degree correction, nothing major. And if that's the case, then still, as long as we stay below 130.74, we can see more downside. So the way I look at it is the following: the minimum expectation I can sort of consider here is the idea that even if I'm bullish Euro Yen, right? Even if I believe Euro Yen should be going up, now the fact that this is a 5 swing suggests to me, even if I'm bullish, I acknowledge that there is a possibility of another leg lower coming. So for example, if I'm bullish, right, I could label this 5 waves maybe as an A, and then I got a bounce here is a B, and then still I would definitely consider the possibility it still can do a C leg like this, right? Let's say I'm let's say I'm bullish. So let's say I want to label this as a wave 1. Let's say. Still, if I want to do it this way, right? Because I see a 5 swings down, I cannot rule out this before turning higher again. So the minimum expectation, the way I see it, whether you're bullish or bearish, is to have another leg lower, at least due to the 5 swing. So as long as we stay below 130.75, therefore we're looking for the downside, at least some sort of ABC to the downside from this peak here can happen in the Euro Yen. All right, so that's the update for today. And as always, if you do want to get regular updates on Euro Yen or other Forex pairs, commodities, indices, and so on, please do feel free to try our service. We have 14 days free trial. And I'll see you all again tomorrow. Have a nice day, everyone.